on the canvas, if you hit the button Assignments, as you can see, you're gonna submit two Proforma analysis. So one is here, and another is here. They're both due on February the 3rd, which is a Thursday, and the due time is midnight. All right. So now let's click on this Proforma analysis. This is the harder one. So you may download this Excel file and start working on it. And this job is considered an in-class assignment. So that's why the due date is pretty close. So after you download it, you open up the Excel file. So you will see here is your balance sheet. Here is your income statement, and you also have sales and history. So three spreadsheets are given to you, and if you read the instruction here, what you are required to do here is to create the Proforma balance sheet and the income statement for the year of 2017. Clearly, we only have the previous 2 years, 2016 and 15. All right. So you are going to right click on this column letter. All right, and you will find a is on the top. Right click and you will find insert here, and then you will need to put a Proforma 2017. All right, so that's how we get started. And you're gonna do the same thing for the balance sheet, and it should be inserted before year of 2016. So pro forma, okay, 2017. All right, and your job is to fill out all these blanks, and so far you don't have a lot of information, so you need to extract information from down below. So you have an interest rate, which is a 10% given to you, and you also have additional fixed assets. Okay, the keyword here is additional. It's not the existing fixed assets. If you look at the existing fixed assets, it's actually right here. Do you see? It's $525,000, and you just add another $50,000 in the pro forma year, and I think that's pretty easy to do, right? And if you keep reading here, and you also have a lifetime of 10 years for this additional fixed assets. So that means after 10 years, it will be salvaged. And based on that, you use a 50,000 divided by 10, you get the additional depreciation. So this 5,000 is from a 50,000 divided by 10. So basically that means for this additional fixed assets, it may be one car, okay, an automobile. It lasts for 10 years, all right, and this is added to your existing assets portfolio, and also your annual depreciation would increase by 5,000 because of this new assets added in there. Okay, now if you keep reading, you will see you're gonna use the year number and historical sales to forecast the sales in 2017. So that's our job here, first job to forecast the sales based on the information right here. Okay, so we have a year number and we have the sales for each year. And also you need to assume cash, short-term debt, long-term debt, common stock dividends are still the same for the year of 2017. All right, that saves a lot of job. Okay, if you look at the balance sheet, cash and short-term, long-term debt are both given. Just use copy the number before. Okay, and here's the challenging part: the account receivable, account payable, inventory accruals, cost of goods sold, and all these are changing in proportion to sales. So we're gonna use the average of the ratios of 16 and 15 to forecast. All right. So let's do the first job, how to forecast the sales. So you will see here on this spreadsheet, we're gonna do the 2017 forecast, and the easier way to do it is to use the trend analysis. Okay, so you just type in trend, and the formula here is you need to use the sales. It equals to A which is an intercept plus b times the year number. So that's the formula we're gonna use. And of course, we are conducting a regression analysis here, and that could be done with just this trend analysis. And the first item you should input is known y's, so the existing y's. So on the left hand side of this equation, that's the y, that's the independent variable. On the right hand side, year is the uh, independent variable. Okay, I'm sorry. Sales is the dependent variable, which is the y, and year is the independent variable, which is the x. All right. So we're gonna select all the sales here, then comma, and then for all existing x's, which are the year number, and then you have a new x, which is the Proforma year 2017, and then basically that's it. You don't need to define a constant or this a or intercept here. So just do the forecast. Okay, so let me use the format painter here. So in the new year, your sales is forecasted to be 4.3 million, and you can just borrow that number. I want you to use a formula connecting that cell. So equal, and then you hit sales right here in another spreadsheet, and then hit enter, and you will see that $2.3 million sale has been connected to your Proforma income statement. And for sales in history, how do we forecast this 4.3 million in other ways? So you can conduct a regression analysis based on this forecasting model, and you first need to install, okay, the regression analysis function. So I want you guys to add in go and make sure this analysis 2-pack is checked. All right, once again, it is options, then add-ins, then hit go, make sure analysis 2-pack is checked. And then you look for data, and you will see the data analysis has been put here. That's a newly installed tool. You hit on it, and then you are going to scroll down, find regression. All right, and in the regression again is asking you to put a y and x. So the y here is the sales for all the years, and the x's are the year numbers. And then basically you can just hit OK. All right, so this is the output for the regression, and you can see here is the intercept, and here is the coefficient for your x, which is the year number. And when you do the forecast, let's say for sales in 2017, and that basically equal to the intercept here plus the coefficient of x times the value of x in the Proforma year, which is 2017. And this way you will get 4.3 million as well. Okay, and you are required to do this because conducting regression analysis is a requirement for this course. And let me just rename it as a regression. There's another way, a graphic way to forecast the sale. So how you do it is to select the existing year numbers and the sales, and then I want you guys to insert a chart, okay? And this chart is called a scatter chart, and just the first one on the left, okay? So this is a scatter chart with no markers, with no lines or curves. So here is your value, and the horizontal axis stands for years, and the vertical axis stands for sales. And what you can do here is right click on one of the data point. Okay, this is for 2012, 2013, any one of them. And then I want you guys to add trend line, and then you will see linear is being chosen because I want this line to be a straight line instead of a curve. And also I want to conduct forecast. That's the whole meaning of it. So we are forecasting the sales. Okay, and we're gonna forecast it just about a year. And so this line will extend to the year of 2017. Then I hit enter. Okay, so right here for 2017, there's an extended number. But this one does not really tell us the value for the sales in the last year. And we can't tell whether it's a 4.3 million or not. So what you can do here is to number one, you can display equation on chart, and based on this equation, you see that's half million, roughly half million for the coefficient of x. That is consistent with the number here. Okay, that's the b in your, that's the coefficient for year, or x. So that's the multiplier there, and also the intercept, or the a, is negative 10 million. All right, and it is also shown in this regression output. Okay, so what we can do here is to use the given number, given forecasted number, to do another round of calculation, but that's not necessary because the calculation is already done here. Or we can just simply plot this new data point into the same chart. Okay, so what I'm going to do here is to right click in the middle of the chart. I'm gonna hit select data, and I'm gonna edit here a little bit. All right, so for the existing series, I want to name it. I want to name it as the past years. All right, and for the new data point, I just add another one, and I want to call it Proforma year. Okay, the x value is 2017, and the y value is the 4.3 million generated from the trend formula. Okay, and you will see that this dot is right on there. Okay, so it's right on the forecasting line, but sometimes it could be off, but this time it is pretty close. So that's the forecasting the sales. And you are required to do all of this method. Number one is to use a trend analysis. Number two is to conduct regression analysis. And before that, you have to install this data analysis 2-pack under the data ribbon. And number three is to draw a chart like this with both existing data and the new forecasted data on the chart. Okay, so now let's just keep going. So here, for all these items, common stock dividends are still the same. So what is a dividend? Oh, by the way, I did not quite put dividend here. So which means we need to forecast a little bit. So how do we get the dividend? So here, dividend. So we need to do a little bit of calculation here, which takes some skill, but it doesn't mean this question is wrong. So how do you get your dividend? We know that retained earning of 2016 equals to retained earning of 2015 plus net income of 2016 minus dividend of 2016. Okay, so this is the formula for retained earning, which is required for all the finance major to memorize. And if you want to solve for dividend of 2016, then it equals to retained earning of 2015 plus net income of 2016 minus retained earning of 2016. Okay, it's just a college math, and you should have no problem doing this easy derivation. So to get a dividend of 2016, we need to use net income plus the retained earnings on the balance sheet, which is right here for 2016, and then minus the retained earnings of 2015. Okay, so this is the formula, and hit enter. oh sorry, it's plus the return earnings of 15, okay, minus the return earnings. You see, I just put a minus sign here, minus the return earnings of 2016. Okay, this is how we do with the Excel, all right, and this is the formula there. Okay, and then for the Proforma year, we assume the dividend is the same, okay, which is 22,000. Just use this cell, borrow the cell, but don't just type in 22,000 in your Proforma space. Okay, and also the common stock, long-term debt, and cash is the same. So for cash, it's the same as last year, and for common stock, it's the same as last year. Short-term debt, which is notes payable, same as last year. Long-term debt, same as last year. So there's not quite change in your cash reserve and all these financing activities. Okay, and something you can calculate. Number one is the accumulated depreciation, as I mentioned. You can first get to the new level of fixed assets in the Proforma year and also get the new level of depreciation. So for the depreciation right here, as you can see, each year it increased by 5,000. So it is 20,000. The annual depreciation right now plus 5,000. Okay, plus 5,000. So you have more assets, so your annual depreciation increases, and that's for the depreciation expense on the balance sheet. And for the income statement, you know, your total equipment increased, so you have the last year's fixed assets plus this year's fixed assets level, so that's the additional fixed assets of 50,000, and then hit enter. Okay, so that's the formula there. So it's this number plus a number from income statement, and that number from income statement is the additional fixed assets of 50,000. All right, and how do you get accumulated depreciation? So this is something we reviewed. The cumulative depreciation in the new year equals to the item of last year plus the depreciation expense this year. Okay, hit enter. So last year accumulated depreciation plus depreciation expense this year. Okay, and then you can get net fixed assets. So it's right here, plant equipment minus accumulated depreciation. All right, and we don't have all the other information here, and we don't have all this information here, but for fixed expenses, the reason it's called fixed because the number does not change. So just directly borrow whatever it had last year. Okay, and now I need to figure out gross of cost of goods sold and then the gross profit. So I need to keep reading the instruction. Account receivable, accounts payable, inventory accruals, and all this will change in proportion to sales. So let me just put this for example. Let's say for the cost of goods sold divided by sales. Okay, so this is a ratio. We agree on that. And we are assuming that this ratio for 2017 equals to, okay, it equals to the ratio of a 16 and a 17 taking average. 16 and 15 taking average. Okay, so based on that, we can calculate the cost of goods sold in the new year because we already have the sales in the new year. Okay, so for this one, you can use cost of goods sold divided by sales. That's the ratio for 2016. And then you use cost of goods sold divided by sales for the year of 2015, the same way. And then the ratio for 2017 is the average, okay, average of the two ratios combined. Okay, so that's the ratio here. Because the cost of goods sold divided by sales is this ratio, therefore, sales times this ratio would be cost of goods sold. Okay, it's just a simple math. All right, make them the same format. All right. The thing is, we are going to use just one line of Excel formula to express the new forecasted number, and that basically means I'm not going to calculate the two ratios separately and then use additional cells to represent them. Instead, this is what I'm going to do. I'm going to first get the average of the two ratios, sales, cost goods sold over sales for the last 2 years. Okay, you will see two ratios, one for 16, one for 15. All right, are taking the average, and then this average ratio is the ratio of 2017 multiplied by the sales of 2017. That's the cost goods sold. Okay, you will get the same answer. So you don't need to use any of the numbers here. Just by inputting a longer line of a formula, you will get the answer. All right, so we're gonna do the same thing for selling and general and administrative expenses. So we're gonna use a sales times average of two ratios in the past. So the same item divided by sales, comma, same item divided by sales. All right, that's it. Okay, and I can basically finish off this income statement. The gross profit here is sales minus cost goods sold, and then from gross profit, I will deduct all these three expenses to get my earnings before interest and taxes. So it's gross profit minus the summation of the three. Okay, and for interest expense, the interest is 10% of your overall debt. So that is the 10% times your principal. And your principal basically is short-term notes payable plus long-term debt. So for simplicity, they both incur the same interest. Okay, look at the formula bar here. It's the interest rate times the balance sheet short-term notes payable, number here, and long-term debt, the number here. Hit enter. Okay, format painter, so on. Okay, so that's the formula. And for earnings before taxes, so I will use EBIT minus interest expense. And for taxes, I will use my taxable income, which is my EBT, multiplied by the 40% right here. So that's my taxes I pay. And then for net income, it is a taxable income minus taxes. Hit enter. Okay, so now I'm pretty much done. Actually, I'm completely done with the income statement for Proforma forecasting. If I hit Control tilde, and you will see all the numbers are calculated based on different kinds of formulas. All right, and for balance sheet, I need to take care of account receivable, inventory, accounts payable, accruals, and all of these are using the same method, and that method is called a percentage of sales method. For the quiz next week, we're gonna do some questions of a percent sales method, and you are allowed to use any formulas you find useful. I put on the formula sheet, but no examples. Okay, no examples, just formulas. All right, back to the balance sheet. So again, it's about the same method called a percentage change, percent of sales method. So I'm going to use the sales, okay, in income statement times the average ratio. All right, and then I move back. It's so hard for me to hit that. I know this is a C6 divided by sales of the same Proforma year, comma. I need to move back to balance sheet again. This time is a D6 on the balance sheet divided by the sales in the same year. Okay, and then I hit enter. So this is my forecasted accounts receivable. Use format painter here. All right. You see, I still have to do inventory. I still have to do accounts payable and accrual and all this, and I don't want to keep switching from income statement to balance sheet. That's just cost too much of my energy. So what I can do, and what you can do here, is to open up a new window, but for the same file. So we're gonna have two windows for the same file. I want you guys to hit this view button, and I want you guys to hit this new window. All right. So now you have two windows, number one, number two. And no matter which window you are operating, it does not matter. So you just hit arrange all, and make sure they are arranged in a vertical way. Okay. So once again, you're gonna do new window, and then view again, arrange all, vertical. So the reason I want to do this is I want to both income statement and a balance sheet to show up on my screen. Okay, so here income statement is done, but for balance sheet it's not quite, and many of them are connected with the income statement. For the inventory here, so I will use the average ratio of the previous 2 years, C7 divided by the sales in 2016, so that's the ratio which is inventory over sales for that year, and then there's a D7 inventory in 15 divided by the sales in 15. All right, so you got another ratio for the year before, and the average of these two ratios, of course, they got to be separate with comma. You see a comma here. All right, and then it will be multiplied by sales in the Proforma year. Then you get average. Okay, nice and easy. Okay, well, I'm gonna use a format painter again. And then for total assets, it's the summation of net fixed assets and total current assets. So let's first figure out the total current. It's just simply the summation of the three. Hit enter. And a total fixed is total assets is a net fixed plus total current, and that's it. And for accounts payable, same problem. And I would say this question will be the hardest on your quiz next week. You're going to use, once again, it's called a percent of sales method, percent of sales. So you're going to assume the ratio of this item to sales in the pro forma year is the same as the years before, or it's as the average of the years before. Okay. So here, again, the average of the ratio, AP divided by sales for 16, comma, then accounts payable divided by, I call it AP, sales for 15, then after that, multiply it by sales in 17. Okay. And then for accruals, same old trick, average of the ratio of 16. Can't hit that. Average ratio of a 16 divided by sales of a 16, comma, and this is if I can't click on it, don't get panicked. So it's a D16. Okay, it's a D16 here divided by, just type in D16, the sales in 2015. Okay, so D16 is a column D, row 16 for accrual of 2015. And after that, multiplied by the sales in the pro forma year. Okay, and I'm gonna use format painter to delete the decimals. And then the total current liabilities would be the summation of the three. Hit enter. And total liabilities would be total current, well, just simply put total current plus long-term debt. Okay, so common stock is given as the year before, and for retained earnings, you should know the formula for retained earnings. In this year, it equals to retained earnings of last year plus net income of this year minus dividend of this year. Okay, so you can see it's three cells connect together. Retained earnings of last year plus net income minus dividend of this year. All right, for total shareholders' equity, it is common stock plus retained earnings. All right, and then we're getting finished. And then for total liabilities and owner's equity, again, it's a summation of the two, total shareholders' equity and the total liabilities. Okay, so for individual items, all of them, my forecasting job is done. However, I still have to think about this. So let me just close this window, which does not change my result. Okay, of course I want to save it. You guys should have it saved multiple times by now. So just to save it. And then you find out that the total assets in this year and the total liabilities in this year is not really matching. So you have more assets to buy, but it just didn't have a lot of money to buy. So, and I call that a deficit. I just use the total capital, okay? People, I change total capital minus total assets, okay? And here, I want to put a word here to indicate now I have a deficit situation because the total assets is too much, but the money I raised is not enough. If this number is positive, then I want to put it as a surplus. If it is zero, I want it to be balanced. And that's the ideal situation, and that's the goal I'm trying to reach in this practice. So let me first use the if statement here. So the if statement basically requires a test. So let's say if this number, the difference between total capital and total assets is less than zero, as it is now, I'm gonna put the word deficit. All right, use a quotation sign to include the word. So that's the output if this statement is true, which means this number is less than zero. Otherwise, there could be two situations, either balanced or deficit, or surplus, I'm sorry. So I'm going to use another if statement to separate balance and surplus. So if this cell, again, is greater than zero, then the output would be surplus. Otherwise, it's not greater than zero, and it's not less than zero, so it's equal to zero, but I don't have to put it equal to zero, that kind of thing, because the computer is smart enough to know that. Then under this situation, under the false situation, which means it's not greater than zero or less than zero, then I have a balanced forecast. Close parentheses for the first if statement, and a close parentheses again for the last if statement. Okay. Okay, so I need to change short notes payable here in order to make this number 0. So I have a balanced balance sheet for the Proforma year. So how can I do that? Well, you may think, what about I just simply add how much ever I need here? So just subtract the negative number. It's like a plus add 31,000 here. So if I do that, then Excel will not function because I'm running into a circular reference problem here. Okay, it's because this deficit is determined by the total equity, which is and the liabilities here, which is determined by the short-term notes payable here, and short-term payable originally determine the deficit. So it's like if I use a 10 plus minus 6, so 10 minus 6, which is a 4. So if I add a 4 back to 10, then minus 6, would that give me 8? The answer is no, because the number 4 here is a generation of number 10. Okay, so you can see that this one just doesn't work. So the computer would not recognize this as a valid command. Okay, so this is called a self-referencing problem. All right, and what about if I recoup the original setting? And if I remember this word, can I just add 31496 here? And you will see that I'm still running a deficit. Why is that? Okay, why is that? And if I just keep adding the deficit, add another number, 1890, and I still running another deficit, just add 113, another deficit, but just getting smaller and smaller. Okay, and you will see +1. You know, now it's getting a little bit touchy. It's getting a little higher than 0.01. So maybe I add 0.4 here. So still it's not really cooperating. So I'm not going to do this kind of a thing. And the problem we're running through here is an iteration problem. Okay, iteration is not self-referencing. Okay, it's a different stuff. So self-referencing is when you add a number to some number that determine, well, let's say if you add b to a and a determines b, then that's not going to work. So this is self-referencing. And an iteration is like this. So when you add the number here, 31496, that's going to change things. So let's say if I add more notes payable, and that basically, let's just say add debt, and that basically increase my interest. So if you check the interest, it's actually higher than before. So you may just check by yourself. The interest will get higher, and then your net income will get lower. So when you pay more interest, you will end up with less net income. And when your net income decrease, then you will have less retained earnings. So I want you guys to observe both of them. So when the number is added here, okay, you will see all the other numbers, okay, would change, especially the retained earnings. If I add some numbers to my notes payable, when I have more debt, I increase my interest, I have a less net income, then my retained earnings would go down. So the return earnings is not constant. So let's just to be clear, add interest, so reduce, so net income decline, and also return earning decline. Okay, and then what happens is my total equity goes down. Then that basically means my total liability and the total equity would decline. Okay, does that make sense? All right, so no matter how I add the numbers here, you see 1,890, that's the deficit here. And I want you guys to observe this return earnings. You will see the return earnings will go down. And still I'm not getting a balanced situation, and that creates a headache. This is called an iteration problem. And so that means I still have a deficit or unbalanced, just call it unbalanced. Okay, so it's unbalanced. So when it's unbalanced, then I need to move back again to add more debt, change debt, and then change the interest will change, net income will change, then the total liabilities and equity will decline or change, then still I end up with an unbalanced situation. So this is called a iteration. And one thing you can do is to allow iteration in your calculation. You can basically hit options Then formulas, you can allow iteration. All right, you will see I can allow one iteration at a time. So this way I can just so the self-referencing would be gone. So just add a number here. So recoup the setting 225,000. That's my original deficit. And now allow iteration. I just subtract this number. Okay, now I got a balance situation. So what you can do here is to allow iteration, make self-referencing available. Okay, um, and uh, and then you would get a balance situation. Okay, once again, you need to hit options, then formulas, enable iteration. Okay, and another way to do it is to use a go seek. Okay, is to use go seek. So let me recoup the setting as before. All right, so with the go seek, my goal seeking here is to make this number 0. So I will use the data and it will see a what if analysis and hit go seek. I'm trying to make this number set this cell to a value of 0 by changing this a single cell for the short-term debt. Okay, if I hit OK, it will not work because this number, this cell must contain a number. And right now it is a formula. You see, even though it's just one cell connected, but still it starts with an equal sign. It's a formula. So I just simply type in 225000 as a value in there. Okay, and then you hit go seek what if analysis here. Go seek, make this number to be 0, and then by changing the short-term debt, which is a solid number, not formula anymore. Okay, and you will see the Excel would automatically compute. So in this way, we don't run through a self-referencing problem. We just use computer power to keep trying different numbers, and then we find out this number happens to be the right one, and that gives a balanced situation which equalize the total assets and the total liabilities and equity. Otherwise, you can use again the you allow the iteration. So you're gonna hit files, formulas, make sure iteration is allowed. Okay, and then you can basically add. Okay, you can add the money needed or subtract the negative number here. So this will also give you a balanced situation.